Good afternoon. Bryan Doherty with Total Farm Marketing, coming to you on December 22nd. Merry Christmas and a heartfelt, safe holiday season and Happy New Year. Along those lines, when I finish this video, stick around. I've got something I'm going to remind you that's offering out to our customers. But in the meantime, we'll get started here. And what I want to start with is the um, disclaimer. And basically, futures and options trading involves significant risk of loss. It may not be suitable for everyone. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition. And I'll give you a few seconds to read through that. Make sure that you're on a well-informed path that trading does involve risk, and that before you enter any position, you should have that conversation with your advisor, know what your risk is, and have an exit strategy. So that's that. So we'll start this week with the corn market and start with the March corn contract. I'm going to bring that contract up here. And the reason why I want to start with March corn is you can see we're in this slippery slope, sideways to lower, just not a whole lot of activity. So what happened in the March contract this week? Well, it lost ground, and you can see in this chart all these overhead lines. It did challenge this area here back the first week of December, and it's just been on this slide. And basically what it is that the weather may have taken a bit of a turn for the better in South America. At least that's the way the market's behaving. It's also holiday type trade, and you hear about drift into the holidays. I think farmers have been very light on sales of 2023 crop, and they've been letting some corn go. They've got core bins. They've got a lot unpriced. It's not ideal, but it's likely a scenario that's actually happening. So it is important to keep in mind, as I mentioned, time of year, and then where we are with just from a timing perspective. So that's the March corn. Now, is there anything new there? Where we had good export sales this week, but yet when you look at today, for example, cattle on feed numbers, hogs and pigs report. I just don't know where the USDA is going to find more feed usage. Those markets, dairy markets, have all been downtrending in price. Not necessarily a really good spot to be. So ultimately, when we look at the big picture perspective on this March corn, it's a slippery path right now. December corn is trading around 457. That could mean that March is on its way down to that area. Remember, September corn went off the board at about the 462 area. So you have a scenario where you've got an inverted market scenario last year, creating high prices for old crop, never a big incentive to sell the new crop on it. Even though prices were pretty good at this time last year, there just wasn't that incentive because you're getting a lot more for the crop you had on hand. Fast forward in the spring, it's dry out, market prices are slipping, not an incentive in the selling that. Then we get this big rally into June on hot, dry conditions. Now it's a weather market, and now do you really want to sell much into that? Supplies are tight, and the market constantly flipped over. The weather was better in July than it was in June. And while it did get hot and dry late August, September, it didn't impact the yield quite as much as people expected. So what to know for the week ahead? The markets are closed on Monday. They will open on Tuesday morning at 8:30, and the same will hold true for the New Year's holiday as well. Bottom line, it looks like weather might be improving in Brazil. May still have some cause for safrinha planting delays, but it's just, in my opinion, it's too early to connect those dots. The market's defensive. Now, the other news this week, there was a couple blocked railway crossings between the U.S. and Mexico. Those have been reopened, so that was a big concern to the market. Immigrants hopping aboard the trains, accidents, I guess some deaths. So they shut the train system down. It looks like those are going to be back open. So that'll take care of corn. Jump over into the soybean market as we look ahead there, looking at a scenario where beans continue to trade in this bigger sideways pattern. They were higher today, but kind of a slippery slope there too. And you got to use a bit of an imagination, but there's a left shoulder, a head, and a right shoulder in this neckline. I didn't particularly care for the trade this week. close under the neckline. As we continue to look at, downside objectives there, then you take the neckline, and what you do basically is push it back down. It gives you a downside objective in that about 1225 area. That's concerning. And keep in mind this too, where prices were back in late last May and early June before they rallied. So if the southern hemisphere weather takes a turn for the better, that could be a concern for us. So January today closed 12.99, 3/4 up 2.5, and down 16 cents for the week. The January March spread did tighten, however, and that's important to note. That tells us we're pretty tight in inventory. We had big export sales and inspections this week, so we are moving the product out. But focus will turn more and more to South America. Argentina conditions have improved significantly, with 97% of their soybean crop to be said to be in normal to good condition. 69% is planted. So it's early, but they're off to a better start than they were in the drought-stricken conditions that they suffered with last year. Soybean meal continues to look soft. Expectations at a lot of crush. Leaves meal leftover. Meal prices have been on the defensive. A lot of will depend on that southern hemisphere crop, in particular in the Argentine region, where most of those beans are crushed. Now, move over to the wheat market here. This is a March daily wheat futures. Actually, a pretty good looking chart right here. Got this bottom here that came at the end of November. Nice rally up. This is called a pennant formation, kind of looking like it wants to break to the top side. At least that's what the bullish traders would argue here, that we have this down push on a high, a lower high, but also a lower low here, and or higher low in this consolidation. The blue line's the 100-day moving average, and this the light blue, the dark blue is the 10-day. That's holding prices in check. So what's new in the news? Well, the dollar was down this week, and that's supportive. And we'll show that chart in a minute. Bear spreading in Kansas City wheat futures due to weather forecast for the southern plains to start this weekend. A recent major storm hit Argentina, damaging some infrastructure and leaving many without power. But the Buenos Aires Grain Exchange does not believe there will be any significant impact on the wheat crop and has left production unchanged at 14.7 million metric tons. They also report the crop is 65% harvested versus 55% from a week ago. Jump over to the livestock. And we look at let's look at the December live cattle. I think that encapsulates the market pretty well. You can see we had this big downturn in price, and now consequently you've got a recovery here up into the 170 area. Asking prices are higher. We'll expect cash might trade up in the 173 to 175, but we continue to hear reports that cattle are backlogged in the packing plants, and ultimately what that could suggest or mean is that supplies are going to get heavier. Now, today's cattle on feed report, 103% on feed versus 102.2 last year. Placements at 98%, and marketing's at 93% versus 93.3. The placement number I want to take into account, 98% versus 95.9 last year. Remember, last year the numbers were light. So what this tells me is that you still got a smaller herd, and you're going to have less supply. The problem could be twofold right now. One is the packers said they're losing money or close to losing money, so they're backing up inventories. The slower kill is backing up supply, maybe adding some weight to cattle. The other thing is we're at a time of the year, typically November, December into January. There's usually some type of winter weather that really limits weight gain, or maybe what I call evaporation days, where it just takes it away from the cattle in the feedlots. We haven't seen that so much. Northern dress trade completed the week up a couple dollars from last week, near 270. Cash has been slow to develop again this week. Light trade may develop, looking for steady to higher next week. Keep in mind we got the short holiday. And let's move over to the, we'll do a quick run through on the hog market here. As we look at February hogs, again, choppy, downtrending, same thing that's plagued the cattle market. Worries about enough inventory and lower demand. And when we talk about lower demand, we continue to focus on things like holiday type spending. consumer credit debt, other items that might keep the consumer, that's catching up to the consumer, higher interest rates catching up to the consumer. Consumers are said to be spending less this year. That hurts all of the meat complex. And then I want to move into another market that exemplifies that. So let's take a look at the February milk market. And so this contract has just been imploding on itself. Weak cheese is the main culprit. And why is cheese weak? Plants have said we just didn't get the orders. So you've got this cow herd that should be on the decline, but all of a sudden you just don't have a demand market that's underpinning this. Again, general concerns on world economies are slowing. Now, stock market had a big upturn here recently, might be a little more optimistic, but keep in mind the stock market may not necessarily be indicative of the economy. It may be of what the marketplace could think of for profits in corporations, as you can see. So this is the mini Dow futures contract. Basically, it represents the stock market or the Dow Jones index, which really had a kind of a sell-off here into October, then this big, magnificent rally. But you can see a big bearish key reversal here. I'll focus in on this. This means the market reached a new high, and then that same day closed lower and traded lower than the previous day. So that's called a bearish key reversal. We'll see if that holds weight. But often when you see those at the top of a rally, they might in fact suggest that the market could be reaching a top. So again, the markets are closed on Monday. I want to reiterate that. I forgot to mention here that the Hogs and Pigs report came out what I would term a little bit on the heavy side. All hogs and pigs 101, kept for breeding at 100, marketed at 101. So not any big surprises there, but I neglected to mention that when we were looking at the hog chart. So what's ahead? Next week, markets closed on Monday, be open Tuesday, Wednesday, Thursday, Friday, normal hours, closed on Monday the week after. So I want to thank you for joining us, and thank you for letting me come into your computer or your phone for this weekend. We appreciate that. In the spirit of the holidays, and as a thank you to our Brokerage Solutions customers, our publishing department in our company called Stewart Peterson Incorporated has a relatively new newsletter called Grain Market Insider. And it's pretty cool. It's based, the nuts and bolts of it is called rules-based approach, which is an analytical approach using this heavy statistics and quantitative analysis. And I'll summarize it calling it the latest technology and programming for basically artificial intelligence to help determine what we think could be good recommendations. So if you'd like to take a look at that, we're offering that 1 year free. We just need you to call in and talk to your advisor and say, hey, I'd like to take a look at that, and they'll set you up, and you can take a look at it free for a year. Other than that, I want to wish you all a Merry Christmas and thank you. My name again, Bryan Doherty, Total Farm Marketing. Have a great and safe weekend and a Merry Christmas. Thank you.